Well, you down with PCE? Yeah, you know me. The core personal consumption expenditures, a key inflation indicator for the Fed. It rose 0.6% in January, above the 0.4% that economists were expecting. And also, the biggest rise since June. But what does it actually mean, this PCE acronym that we're talking about here? Well, as defined by the BEA, the Bureau of Economic Analysis, the index is a measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. The Bureau of Labor Statistics, you know them, they produce CPI, and it's the BEA that actually produces PCE. And so we've got to go through some of the differences here between the two inflationary barometers and measures here. One of which, as we mentioned, is measured by the BEA versus the, of course, aforementioned BLS. And then this also tracks expenditures by consumers and businesses for consumers. Now, here's where it gets a little bit different. It's weighted differently by different relative performance here. And interesting to note, it tracks urban and rural consumption measures here. And so on that weighting, CPI uses consumer expenditure surveys versus PCE using data on what businesses have sold to consumers out there. Now, the Fed's battle to fight inflation is an ongoing battle. Let's listen to what Powell has said about bringing prices under control.
For purposes of this discussion, I'll focus my comments on core PCE inflation, which omits the food and energy inflation components, which have been lower recently, but can be quite volatile.
Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives.
I know what you're thinking. My brother in Christ, why does this matter here? Okay, well, the main indicators the Fed used to evaluate the level of inflation that consumers are incurring in the U.S. in an economy that is two-thirds driven by consumption, these gauges help policymakers to understand the health of the economy with relation to their own goals of price stability and maximum employment. Now, as it relates to the current economic environment, when the data continues to come in high, the Fed interprets that there is upward persistent price pressure in the economy. And in this case, they would be able to conclude that even after their efforts to enact policy that tempers inflation, more aggressive action may still be necessary. There was a trend of disinflation which had been reflected in the data of recent months before the January 2023 reading surprised to the upside.